Hello and welcome. You with us here in Business Today. I'm Abha Bakaya. Here are the headlines. Seesawing sentiment on Dalal Street as investors eye the all-important RBI rate hike decision tomorrow. Benchmarks swing in a range-bound fashion with Nifty ending the day above 17,700. Sensex clocking in a close above 60,000. A ray of hope for the Adani empire after a strong Q3 show by Adani Transmission. It's Ambuja Cement and Adani Green to report upbeat December quarter profits. Meanwhile, Adani Ports reported a muted Q3. RBI's Monetary Policy Committee starts its three-day deliberations amid murmurs of a pause in the policy repo rate. The street believes the 25 basis point rate hike is on the cards. Even though Adani Enterprises stock rallied by more than 14% today, there are those who believe the stock is ridiculously overpriced. One of these people is global valuation expert Aswath Damodaran, who's gone public with a figure of 947 rupees as what he feels is the right value. He says it's more suited for the share price of the company than what it's trading at right now. India Today Group's Rajdeep Sardesai caught up with Professor of NYU Stern. Here are some of the responses in that conversation.
I think that's hyperbole. I mean, a con to me is something where there's no substance. A Ponzi scheme is a con. There's nothing there. The entire objective is to fool people, separate them from their money, and leave them poor. And I don't think Adani fits that description. I think it has too much substance as a company to be a con. And I think, in a sense, what Adani has done in the interests of preserving control has fed into the Hindenburg reports. Okay, the reason people are willing to listen is because of some of the actions that Adani has taken, not so much because they wanted to con people, but because they were so interested in preserving control at the company. It's sometimes in their zeal to keep control at companies, I think family groups get a little carried away. They take actions that are not about ripping other people off, it's about preserving control. And when I look at Adani's actions, even if everything in the Hindenburg report is true, and it might not or might not be, it could still be contested, what I see is the picture of a company that is so focused on family group members keeping control that it's probably cut corners, taken decisions that are designed to advance it on that objective. But to call it a con, I think, it's hyperbole. So short sellers do it all the time. I'm not surprised the Hindenburg report does this, because I've seen short reports before. They have to catch your attention, and it did, right? And you see that headline, you say, oh, there must be something here that is essentially designed to rip off people, so let me go see what it is. See, I don't know, the web of shell companies, it's unlikely that the Hindenburg report made it out of thin air. Because this is, I mean, in fact, as I read the Hindenburg report, I went back and checked prior reports in the Indian press. Almost everything in that report is, in a sense, almost in the public domain. Nothing there was something people say, I'd never heard of that before. There are 6,300 companies in Mauritius. It's a company with $11.5 billion GDP. You're saying, what the heck are 6,300 companies doing in there? This is a place where Indian businesses go, and we can debate that this is moral or ethical, or the Indian government knows this, right? It's been trying to crack down on it. So is it possible that the Adani Group has 38 shell companies in Mauritius? Yes. That part of it, so even if that allegation is right, let's talk about the price manipulation part. This is the part that I don't get. This is not a small company. It's a company with small float, but it's a company whose market cap increased by $100 billion. To do that, you need a lot of trading. So what I was looking for in the report is show me the evidence of trading jumping tenfold. In the last 18 months, the price is going up. Maybe you have some evidence that shows me that the trading volume was 20 times higher than before. I didn't see that evidence. Almost all the evidence is about shell companies that are essentially Adani shells that hold shares in the company. Here's the part of the report that I'm willing to believe. That 75% threshold, that's a listing requirement to be I am willing to believe that Adani has played fast and loose with that rule. This is a control fixation. You know what? You can control a company with 70%, but somehow they feel the urge to almost have complete control of the company. So am I willing to believe that that part of the allegation is true, that they might have been at 76% and they used it, the shell company started? Absolutely. That's not a price manipulation argument. That's a rule-breaking argument. We could talk about what the penalty for that should be. So it's a mix of serious stuff with not so serious stuff, with hearsay is the best way I can describe some of the stuff. Somebody told the group that somebody had told them that there were crooked things going on. This could never be accepted in a court of law. But when you're a short seller, you can talk about guilt by association. And you see that in the report, right? The brother, cousin, somebody else who's done something wrong, and the Adani Group has connections to them. So by guilt by association, it must be the sins of the Adani company too. So as I read the report, there's a lot of bullet points there where I look and say, I'm not sure what that tells me about the company, and I'm not sure that that's uncommon, that is that uncommon with an Indian business to begin with. Now we can talk about whether that's good or bad, that so many Indian companies follow these practices. But I have a feeling that the Adani Group has been caught in a web of their own making. That desire for control has led them to cut corners on things, and that's now going to come back. And it's already haunting them, because a short seller has taken those things and said, this must mean, because the two biggest allegations to me were the price manipulation, which is serious, and the other is that they're manipulating the financials of the underlying companies, make the company look more, their earnings manipulation, that the revenues are being pumped up. And that part I find puzzling, because if they're manipulating earnings, they're doing an awfully bad job of it, because Adani companies are not profitable. Their margins are tiny, they're struggling to make money. So if you're manipulating earnings, I'd have expected you to do a much better job and report 10% margins, not 3.6% margins. It's normal and it's concerning. They're not either or, right? I mean, in a sense, infrastructure companies always borrow a lot of money. And they're at the mercy of the regulators because they often run quasi-utilities. An airport, for instance. You can't give a private company complete power to raise prices, right? Because if you did that, you'd be driving airlines out of gates and, charging customers 3 times more. So the businesses that the Adanis are in are low margin businesses, even in their best days, but they're very, very capital intensive businesses. And for whatever reason, and this is not the Adani's fault, going back 100 years, infrastructure companies have always used a lot of debt. They've used a lot of debt because their view is, once we build it, then we'll find a way to keep paying the interest. And you can't just blame the Adanis. Banks lend not based on earnings power or cash flows. They like to lend on big physical assets, right? Look at the real estate business. If you think about cash flows, nobody should be lending on Mumbai real estate. There isn't enough rental income in an expensive piece of real estate property. But you know what? Bankers like to lend on big physical assets. Infrastructure businesses feed on that. So this is, and I don't think you can make that a crime. You can argue that this is a bad risk. You should not be borrowing so much money that your operating income is only 1.4 times your interest expense. There's not much buffer. Perhaps, no. But you know what? LIC has made a lot worse investments than the Adani Group. I'll wager, if you look at the cost at which they got those shares and what those shares are worth today, it's one of the better investments that the LIC has made over the last 20 years. For as long as the LIC has been around, it's been our investor of last resort, right? Basically, the government has forced the LIC to invest in every bad company that needs money. The Adani Group is not one of those companies. So if LICs invest in the Adani Group, I'd be interested in what motivated that investment. But by itself, it's one of India's biggest institutional investors. Adani Group was in terms of market cap, one of the biggest Indian companies.
Adani Group stocks finally rebounded today after being hammered for more than a week. The flagship Adani Enterprises rallied by nearly 15% on positive news which has been filtering in the past few days. Investors in the group gained around 12,000 crore rupees in wealth today.
Eight days of relentless mauling by bears in Adani Group shares. 8 days of its market capitalization being slashed by half. 8 days in which Gautam Adani found himself out of the global top 10 rich list. The tide, however, turned today with bulls again active in the Adani counters. Adani Enterprises, the group flagship, which had fallen from 3,442 rupees on 25th of January to a low of 1,017 rupees on the 3rd of February, rallied 14.6% today to close at 1,803 rupees. 5 of the other 9 Adani counters were also in the green, with just Adani Power, Adani Transmission, Adani Green and Adani Total ending the day in red. Adani investors gained 12,000 crore rupees in wealth today, even though their net worth is down 9.3 lakh crore rupees since the Hindenburg report sank the group's stock.
The about turn in Adani Group stocks was in a large part because of the announcement made by the company that they would be prepaying loans worth over $1 billion before their maturity in September 2024. This move would release pledged promoter shares in Adani Greens, Adani Power as well as Adani Transmission. Moreover, there was positive commentary from Indian regulators as well, who said that all is well at the company.
Reserve Bank of India, which was reported to have sought clarifications from banks which have lent to the Adanis, said the banking sector remained resilient and stable, adding that all parameters remained healthy. Capital markets regulator SEBI also issued a statement about market stability and assured investors it was functioning in a transparent, fair and efficient manner. The two big lenders, SBI and LIC, also issued statements that their investments in Adani were perfectly safe.
Both LIC and SBI have given their statements publicly and in great detail. The heads themselves came out and spoke about it. So there's nothing that I can materially add to that. Regulators in India are doing their job and they should be on their toes to do the job. Any disputes on that? And no hum aapke hai kaun here. I'm seriously saying regulators will have to do their job.
Meanwhile, in a big boost to the Adani Group, JP Morgan has decided to give the group's bonds in its influential bond indices. This comes after 3 large global institutions jettisoned these bonds from their portfolios. Rating agencies Fitch and Moody's also gave a fillip to investor confidence in the Adani Group with their statements that there would be no impact on ratings or cash flows and that the group was under no pressure to repay debt at least till 2024. With Akansha Chaturvedi, Bureau Report, Business Today Television.
Now, one of the key drivers for Adani stocks was Q3 earnings. Adani Ports delivered a mixed set of numbers for the December quarter. The company's Q3 revenues jumped 18% to nearly 4,800 crores versus a little over 4,000 crores same time last year. Profits, however, fell 13% to 1,300 crores versus 1,500 crores on a year-on-year basis. The company has also guided for revenue anywhere between 19,200 crores to 19,800 crore rupees for FY23. On the other hand, Adani Transmission has reported a strong set as well. The company's consolidated net profit zooming nearly 73% on the back of a one-time gain. The company clocked in over 15% rise in Q3 revenue and EBITDA witnessed a double-digit increase of 29%. According to the company's statement, the increase in revenue in the third quarter was due to improved energy demand. Benchmarks on the Dalal Street closed in the red following a flat start to the trading day. Both the Sensex and Nifty ended the session with minor cuts but off the day's low. Ahead of the all-important RBI rate decision, the Nifty closed 40 points lower to settle above 17,700. A 220-point cut on the Sensex as we closed the day above 60,200. A 15% rally on Adani Enterprises, that's the top gainer on the Nifty today, followed by modest gains on names like Dr. Reddy's, Adani Ports, Kotak Mahindra and IndusInd Bank. On the losing end, we had a couple of those metal names, Tata Steel, Hindalco, both closing with cuts upward of 4%. ITC, Hero MotoCorp and Maruti. The three-day deliberations of the RBI's rate-setting panel has commenced amid expectations of a smaller 25 basis point rate hike or a pause on the rate hike spree that started May last year to tackle high inflation. With retail inflation below RBI's 6% tolerance level, will the central bank press pause tomorrow itself, or should we expect more rate hikes here on? My colleague Karishma Sadani is joining us with some of those key expectations. Take it away, Karishma.
Well, right, Abha, the Reserve Bank of India is widely expected to raise the repo rate by 25 basis points to 6.50%. In fact, this expected quantum is lesser than in the previous policy. As we know, inflation is cooling off. We also know previously we've seen that India's consumer price index dropped to a 12-month low of close to 5.88%. A month ago, the figures that were released in the month of January, early January. In fact, Abha, we also spoke to Secretary of Department of Economic Affairs, and he did share with us that following the Fed rate hike, it is of course the policy tightening that has to be looked at in India. But if you see, because of inflation cooling down, this quantum of increase in rate hike is also very limited. If you see, RBI has gone from 50 to 50 to 50 to 35, and now likely it could go for a 25 basis point increase.
Thanks for that, Karishma. Now, a consensus view coming in from analysts is that of a 25 basis point hike, although few think the central bank would hold off on hiking rates due to the mild inflation rates. Business Today TV's managing editor Siddharth Zarabi caught up with Yes Bank's chief economist Indranil Pan and Anand Adhikari, the managing editor of Business Day magazine, to understand where their expectations stand. Listen in.
Welcome to Easynomics. Indranil, I'm starting with you. With the bigger plans of the government now clear and visible to the Reserve Bank of India, and the United States thinking as far as monetary policy is concerned also clear, what sort of considerations is the RBI grappling with, the MPC grappling with, as it decides the future course of monetary policy?
I think there are lots of moving pieces, but starting from the budget, I think the comfort that the RBI can draw from the budget is that it is definitely not inflationary. It has definitely shown a consolidation towards the 5.9, which is a 0.5% lower than where they are likely to be ending in this financial year. Having said that, I think you rightly pointed out that the global interest rate conditions are being watched because to a large extent the differential in terms of the domestic policies, the interest rates here vis-a-vis the external interest rates will also to a large extent determine the type of flows that India can expect, and flows are important if we have to find adequate money for our own development needs. On the inflation side, I think the RBI is now pretty clear about the fact that they are watching the core inflation, and very interestingly, even the Fed and more or less everybody is sort of hawk-eyed on the core inflation within their own countries, and that's something that will possibly be taken into consideration by the Reserve Bank of India.
Anand, the future course of monetary policy, the need to support growth as well as control inflation. What's the choice according to you that the policymakers are discussing?
So Siddharth, I expect, one last hike, maybe 25 basis point in the tomorrow's, policy. So the repo rate will go up, from 6.5 to 6.50. I think the big issue, Siddharth, is going to be, maintaining the current stance of, withdrawal of accommodation. Now, if you see the last policy, two of the members, Asima Goel voted against, maintaining the stance of, this withdrawal of accommodation, and similarly, Jayant Verma, too, also voted against, maintaining the stance of withdrawal of accommodation. So I guess, that is going to be a big issue tomorrow, whether, the others member will also join, Asima Goel and Jayant Verma.
Indranil, the bit about inflation and how it has performed in the recent period, and yet you have yourself in our last discussion together pointed towards sticky core inflation. from the last time that we spoke to now, have things changed? What could you tell our viewers?
Well, I think the two consecutive months of drop in inflation was definitely the seasonal effect, the winter crops coming into the market, and that's possibly the reason, that was the reason why vegetable prices actually came down for quite sharply, and that led to the drop in the inflation to the 5.72%. Now, having said that, if I track the sort of the advanced numbers out of the mandi, the vegetable prices have definitely moved higher in January. Cereals appeared to be sticky. Lots of other commodities, including fish, meat, and egg, those are also looking to be slightly on the stickier side, on the higher side. And our own estimates for inflation for the January reading, which the RBI obviously will not see before they announce the policy, but they will have some inclinations of this on the same, is looking once again above than the 6% threshold level. So there I think there is possibly no chance of the RBI letting its guard down on the inflation. As you rightly said, the core remains a concern. So is in the rest of the world. And if food prices normalize from the couple of months of drops that we just saw, that also will lend to a stickiness not in the core alone, but also to the headline inflation. And these are something that would be taken into consideration while they will determine what to do in tomorrow's policy, which we expect a 25 basis points increase. And we also sort of indicate in our analytical piece that the change in stance is possibly not likely immediately.
Anand, in the past, and the 225 basis points increase that we have seen since last April, one of the factors, and RBI decision makers have also alluded to this, is how US interest rates are moving and its subsequent impact on the Indian currency. How much of an issue is that at this point of time?
So that the differential, between the Indian rate and the US rate, I think is around 165 basis point. And if you see historically, that was around 200 to 300 basis point. So to that extent, tomorrow, if we can, I have my doubts whether we'll get the kind of funds we were getting, earlier. So that will have an impact, on the funds, especially, the FI funds which comes into the debt market and the equity market. So a lower differential, that is a very negative for us.
And that's where we leave it on the show tonight. Thanks so much for watching.